Good morning, everyone. Sorry for the slight delay. The system got stuck and I had to restart all over again. I hope all of you are doing good. Just if you can hear my audio, video, and also the screen, you can just drop in a hi and then we can continue. So now the idea of today's session is to study some simple standards. These are high scoring standards, and after having completed heavier standards like Indies 116 and Indies 115, I thought it would be better if we can take this week to complete important but not very complex standards, because sometimes somewhere or the other questions keep on coming up in the examination, and they can also give it as a part of analysis or a combined case study, right? And it is important for us to go through quickly these standards so that we are comfortable, at the same time we are able to understand stuff as well. That is the whole idea. So today we will be talking about three standards that we are taking up. The first one is Index 16, that deals with property, plant and equipment. Then we have Index 40, and then we have Index 38. Index 38, very very important. A lot of time keep on coming up from this standard as well. So we'll talk about Index 38, Index 40, and Index 16. To begin with, we'll start with Index 16, that deals with property, plant and equipment, and then we will move to Index 40 and Index 30. A lot of things are common between these standards. So for example, if you talk about revaluation, those are common. The core part of the definitions, those are common. So because there is some form of commonality between these standards, during examination time also, when you have to revise, you have to revise these three standards together, and maybe immediately after this we can follow up with Index 36, Index 105, and also Index 2 can be completed, so that the revision becomes logical. Because if you see revaluation, the way we do revaluation, the way we treat revaluation in day 16, in day 38, it is the same. Then the way we treat exchanges, that those aspects are also same. Definitions, a lot of aspects are common. So that is the reason why we are taking up these standards simultaneously, right? So I hope all of you are able to hear me. Let me just quickly check up the stream. Right? Yeah. Good morning, Nivedita. Good morning, Saisham. Good morning, Murli. All of you have been consistent. Good morning to everyone once again who have joined in slightly late. So, before we start the standards, let me give you a very, very simple example for us to understand the context of the standard. So, let us say there is a company which has buildings, or along with land and buildings. Now, when we initially learned accounting, the moment we saw land, we used to say fixed asset, fixed asset. That is how we were taught, right? Even in your 11th or 12th accounting. But now, land and building, when you talk about, you have to first understand what is the purpose of buying this particular land or building. Is the purpose to buy land and building, is it for selling it, or is the purpose of buying land and building, is it for using it in the business? Accordingly, the classification changes. So if this land and building is something which is purchased for, let us say, use in business, for use in business, if you have purchased this land and building for using it in business, then we say it is an item of property, plant and equipment. Sorry, something is morning minute. So if we have land and building which is being used in the business, we say it is an item of property, plant and equipment. The intention is to use it in the business. If the same land building is held by a builder, and the objective of the builder is to sell it in the sell to customers in the course of its business, then in that case what do we say? This item is an item of inventory. Okay, if the builder is holding it to sell it to the customers, we say it is an item of inventory. If the same building is held, the objective is I will buy today, I will forget, I will earn rentals in the future. If I get some benefit, if I get some capital appreciation, I will sell. So the third category is where the intention is to earn rent or to earn capital appreciation. If that is the intention, then we say it is an investment property, and this is covered by Ind AS 40. This is covered by 2 and this is covered by Ind AS 16. So the same item, depending on what is the purpose, what is the objective, can be PP, it can be inventory, it can be investment property. Right? Now, one very important thing is under investment property, you cover only land and buildings. You will not cover other assets. Like for example, if I purchase cars and if I want to give it on hire, then I will not call it investment property. In that case, it will be a property, plant and equipment item only. Right? So same way, if car is for purchase and sale to the customers, then the car will be inventory. If the car is for the purpose of using it in the business or giving it out to the rental for on rental to others, then in that case it will be an item of property, plant and equipment. In case of land and building, if it is for rental, capital appreciation, we will follow investment, or we'll call it investment property. Of course, we are not discussing Ind AS 2 currently. We are discussing 16, 40 and 30 here. Now, few more quick things. 16 allows both cost model and a revaluation model, whereas 40 permits only the cost model. That is one important thing, because sometimes questions get tested in the examination where they will give you cost and fair value. You have to always consider that it will be under the cost model only, right? Then depreciation, what we learn in 16 will be similar to what we will do in 40, so that aspect is also common. So that is one more commonality. Now, in all the three standards, we need to understand recognition. Recognition meaning, when do we recognize, when do we pass a journal entry? Then measurement. When we say measurement, at what value? Now this measurement can be initial and subsequent measurement. So recognition, measurement, then de-recognition. Recognition, bringing it into the books. De-recognition, moving it out of the books. And then of course your presentation and disclosures. Broadly, if you understand all of this, the three standards are done. So to begin with, let us start with the basic definitions. I think the system is troubling me a lot today. Just a second. It's been crashing again and again.